Stocks trade soft but ranged as uncertainty over policy moves and economic factors loom. Consumer durables perk up on festive sales but metals slump.
Strong sales growth and a better product mix make the Titan stock sparkle. Even Kalyan Jewellers scales to a new high on the back of healthy sales in India and the Middle East.
Hero MotoCorp gains ahead of the launch of its electric scooter Vida. Today, a brokerage call suggests a multi-year double-digit growth for the sector and a price upgrade also for the stock.
And bad news for the rupee. The rupee falls to a fresh low of 82.35 to the dollar, pressured by dollar strength and the 9% rise in crude prices this week. Bond yields are also up, and the 10-year bond yield at 7.5% is the highest that we've seen since June.
Hello and welcome. Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu, with me Sonia Shenoy as well as Ekta Batra. Not looking particularly good for our markets, and the cues are perhaps coming in from the currency market. The rupee scaling fresh record lows as we speak, and that's telling on our markets. Every time we see a bit of a recovery from the lows, there has been selling into that recovery itself, and as we speak, the rupee is at the low point of the trade, and at the same time we have the equity markets at the low point as well. The Nifty sitting with a sharp cut of almost 100 odd points. Hi.
Hi, good afternoon. Afternoon, Ekta. And there's also a big event, right? I mean, there's the US jobs data that comes out later in the evening. If the jobs data is strong, which it's expected to be, then the Fed may perhaps not go very easy on loosening at any point in time and may continue to have its cautious stance. So all of that, traders may not want to leave any of their positions open. There's the earnings season that we kickstart next week as well. So many cues lined up and a little bit of caution ahead of that.
Yes, absolutely, no doubt. Let's see whether the FIIs in fact continue buying into our markets after 3 consecutive sessions of in fact putting money into the cash market. So let's see whether that takes place or not, and whether or not they are scared off a little bit with the rupee. But let's talk about a couple of stocks which are managing to be in focus on account of their pre-quarterly sales figures. And this is in our special segment, Value Add. Manglam is here. He's focusing on jewelry stocks. Titan, for example, is your top gain on the Nifty at this point in time. Kalyan Jewellers is doing well. And remember, people are buying jewelry despite the fact that the rupee has been depreciating as well. So, Manglam, tell us more about what the sales look like and what might the trend be also.
Well, whether you're buying jewelry or not.
I'm not buying jewelry anytime soon. But, while the rupee has depreciated, gold prices have also come off from the peak. So that makes people want to buy it. But what's heartening about the second quarter this time around is that second quarters are usually lean for jewelry buying because you don't have the wedding seasons. There's a fair amount of monsoon. And also there is the Shraddh festival or the Shraddh season where, not a lot of auspicious things are done. But despite that, we saw good gains coming in terms of sales growth for both Titan and Kalyan. What I'm trying to, decode here is the difference between Titan and Kalyan. Titan, for perspective, is 3 times the size of Kalyan. But despite that, they grew around 18% on a base of 66%, whereas Kalyan grew 20% on a base of 61%. That's not 16, 61%. And if you take a look at the India business itself, Titan has grown 18%, whereas Kalyan Jewellers has grown 14%. So basically, Titan has outperformed, Kalyan Jewellers as far as the India business is concerned. Why is it that Kalyan has then grown faster? Well, because a relatively smaller part of their business, which is Middle East, has grown about 65%. Middle East contributes around 16% to their overall sales. As far as, store addition is concerned as well, Kalyan Jewellers has added 5 stores in the past quarter, whereas Titan has added 25 stores. So on a higher base, the company is adding stores at a much faster clip. And what does that mean for margins? Kalyan Jewellers has seen a fair amount of competitive intensity. Remember, a higher share of revenue for Kalyan Jeweller comes in from plain gold, which is gold jewelry, etc., lower margin business. Whereas for Titan, they saw a better studded ratio this time. So diamond jewelry doing well for them. That means their margins will do well. So not only has Titan grown faster than Kalyan, they've expanded their store footprint faster than Kalyan, and their margins are also likely to be better than Kalyan. So why is it that both the stocks are moving at the same clip right now? Valuations, because Titan trades at 60 times FY24 earnings, whereas Kalyan trades at just around 25 times. So not only is Titan 3 times bigger than Kalyan, it's also 3 times pricier.
More expensive.
Than,
okay,
Kalyan.
And we always talk about Titan as far as jewelry is concerned, right? But watches segment has also done very well, up about 20%. But the stock of the moment is Varoni Engineering. The management is in fact addressing analysts. Let's listen into what they have to say on the deal value being lowered.
Positive EBITDA margins, as we have seen in Q1 FY23. In our future strategy, prudent capital allocation and free cash flow generation will get a lot of focus. I will now request our Group CFO to walk you through the presentation, which has already been uploaded in our website and on the stock exchange. Over to you, Mahendra.
Thank you, Tarang. Good afternoon, everybody. Welcome to this call once again. I'm happy to talk to all of you once again in my new role here. As Tarang explained, the presentation has been uploaded in the website already. I think some of you or all of you might have seen it. I'll take you through the presentation right now. In slide number 2, we try to explain what was the initial assumption or proposal when we actually started the deal a few months ago. And on the right side, in slide number 2, we explain the changes which have happened in the final settlement. So as you can see, and as Mr. Tarang also explained earlier in the call, the 600 million enterprise value had to be brought down to or amended to 520 million. Considering the current economic scenario across the globe, as you also might have noticed in various press releases and news items, across the globe, the merger and acquisition activity has come down significantly. In fact, I was reading news reports that between US and Europe, the merger and acquisition activity went down this year by close to 50 to 60% compared to last year. So our focus was mainly to basically save this deal or conclude this deal. And also the continuing outlook also seems to be somewhat a matter of concern. Because all of you know that Europe is going through a lot of recessionary fears. So to accommodate these requests and these concerns of the buyer, we have to bring down the value from 600 to 520 million. And then this out-of-court settlement also had to be finalized for 51 million, though we had a strong case to fight it out. Again, in order to conclude the deal, we had to agree for this high amount of settlement. But the good thing is this will actually put rest to all these disputes which have been hanging for some time. And then the net cash accretion to Varroc will now come down to 5 to 9 million. I will explain the walk in the subsequent slides. Another positive thing here is the escrow, which was earlier pegged at 35 million, has now been brought down to 28 million. So with this, we concluded the deal. Previously, as you might remember, the enterprise value of 600 million, after all these adjustments for debt and debt-like items, is supposed to result in a net cash accretion of about 157 to 161 million euros. With this reduction from 600 to 520 and the value of settlement coming in, the net cash accretion will now come to 5 to 9 million. Enterprise value reduction we already talked about. So
Okay, that's Varoni Engineering telling investors and analysts why they had to bring down the value of the sale of their four-wheeler lighting business. And they say that the macroeconomic challenges were so high that they wanted to conclude the deal in any way, even if it was at a lower price. And the focus is now on prudent capital allocation and free cash flow generation. And the focus was to save and conclude this deal. 400 million of debt has been taken away from the balance sheet, and across the globe they say mergers and acquisition activity has come down significantly. So I guess, you know, whichever way it was possible, they just wanted to conclude the deal.
Yes, and I think there's that litigation risk which is also lifted with regards to this. Though it is a lower price, there is that litigation risk which could play out in the long term as a positive since it is being lifted. But nonetheless, the stock down around 8.5%. It'll be interesting to see what kind of questions and answers come up in the Q&A section with the investors. So we'll keep a track on the call as well as, the stock movement during the call as well. We'll take a short break. On the other side, however, we'll be talking to the Chief Growth Officer at Angel One, who'll join in to talk about the company's business updates. Stay tuned.
Okay, welcome back, folks. Just a quick word on the market. It's still down about 100 odd points. It hasn't gotten worse. I mean, it did get worse when we started the show. But now the market is sort of just trending around that 17,220 mark. Let's see. A lot of pressure coming in from cement, autos, banks. So SBI, Ultratech Cement, M&M, all your top losers in trade at the moment. But there are also, some pockets of value. So this morning, Jefferies put out a big upgrade on the auto sector, and I just wanted to talk a little bit about that. Across the board, they expect a 17 to 19% growth, volume compounded growth for passenger vehicles, two-wheelers and trucks. This is over FY22 to 25. Now, they say that not only has demand picked up, but falling metal prices will aid the margins as well. So overall, they're expecting a double-digit compounded growth for most OEMs. Within that, their preferred buys are TVS Motor, Maruti, Eicher and Tata Motors. They are not too comfortable with the global overseas, the companies, auto ancillaries that have an overseas exposure, whether it's Motherson or Bharat Forge. So they continue to be underperform over there. And they've upgraded Hero MotoCorp to a buy. They have a target price of 3,000. The big theme that they're looking at is electrification of vehicles. And in that context, Hero Moto is launching its first electric scooter today under the Vida brand. So all eyes will be on that. But all in all, a big buy call coming in from Jefferies on the auto sector.
All right, we take that point. Meanwhile, just keep an eye out on the flashes at the bottom of your screen where Xiaomi India is saying that the information in a tweet of the company actually moving its operations off India is absolutely baseless. 99% of their smartphones and 100% of their other electronics are made in India. So, if there are some tweets regarding, Xiaomi's movement out of India, they are, the company said, false and baseless. And as a result of which, we are seeing, we saw some weakness in Dixon Tech because of those alleged rumors, etc. And Dixon Tech was at the low point of trade. But now as we speak, we're seeing some bit of amelioration on the stock from the lows. Still about 1.9% lower, in today's trading session, but is recovering from the lows as Xiaomi's clarification comes by. But the other stock which is clocking in mild gains, that is Equitas SFB. Steady term deposits have aided the growth this quarter. Abhishek joins in.
Well, they came out with a business update and it is as good as it can be given the fact that Q1 momentum has been carried on to Q2 as well. They have lost out on CASA ratio, but they have made up for the liquidity in the balance sheet via term deposit and bulk deposits. So to begin with, deposit momentum was strong at about 20.1% YOY and about 6.6% sequentially. The loan growth momentum continued to remain healthy at 20.15% YOY and about close to 5.15% on a sequential basis. CASA ratio has declined by 350-360 basis point on a sequential basis. However, retail term deposits are up 8.2% sequentially and bulk deposits are up nearly 31% sequentially. That has not impacted the cost of funds, which has moved up only by 5 basis points on a sequential basis. So overall, good set of business update coming in from Equitas Small Finance Bank. Back to you.
Okay, thanks a lot for that. Talking about business updates, Angel One posted a very strong monthly update for Q2. The total client base of Angel One rose 77% compared to same time last year at 1.1 crores, while their daily order saw a 25% rise month on month. Prabhakar Tiwari, who's the Chief Growth Officer at Angel One, joins us now to discuss more on the business update. I just want to ask you about the overall client additions, right? In the month of September, it was a tad bit lower. Of course, in general, it's been on an uptrend. Why do you think that is? Is it because there was a muted performance by the market, some amount of caution? And on an average, what would the run rate look like in terms of gross client acquisition over the next few quarters?
Yeah, hi. First of all, thanks for inviting me here today to talk about Angel One. So first of all, September had festive influence. And what we have seen over the years that during festive time, the shopping intent takes precedence over investment intent. So we believe October will also be impacted by that because of Diwali. However, our view is that in coming months, we will again see the same trend, positive trend in gross client acquisition.
Mr. Tiwari, just yesterday we were discussing the options volumes picking up very significantly. Manglam was giving us some data on it. And if I see your average daily turnover, your F&O segment is up 117% on a year-on-year basis. It's up 11% on a month-on-month basis as well. Just give us a sense in terms of the kind of traction you are seeing and how much is it probably going to be as a percentage of sales going forward? What are you doing from a company perspective to increase volumes?
See, as a percentage of the business, it's very difficult to predict at this juncture because there are too many moving parts there. However, as an organization, our job is to ensure that there's an easy-to-use platform which is reliable, secure, and effortless platform which is available. And then we educate our customers through our smart money platform, through our social media, and through our tie-ups with influencers on understanding of future and options. We also provide features like Insta Trade, which makes it possible both for amateurs and also for the experienced traders to take the full advantage of the platform. So these are the kind of efforts we take, both in terms of educating and providing superior product experience.
Right. Just a couple of points on your client acquisition rate. Activation rate rather. I was looking at it from FY20, it was around 31%, 21 it was 38%, 39% in FY22 as well. First quarter as well, it's meandering around the 38, 39% mark. For peers, it is upwards of 50%. What exactly explains your lower activation rate? And is there something that you're doing to, increase that?
I would not call it a very lower activation rate as such. See, fundamentally, if you look at, we are a technology platform and people have intent to invest in the market, so they open an account. But at times they do not find the right opportunities to invest, so they do not get activated immediately. But at the same time, they keep a watch list, they keep themselves educated about the market, and eventually they go ahead and invest. Today, if you ask us, this is where we see a big opportunity for us for a super app. Because in our super app, the investment intent is not just for the stock market, but we can give the same investment intent for, say, mutual fund. And we can also provide other financial services like loans and insurance. So at that point of time, when we will see activation rate in its entirety, we will see a more robust number.
Would have been across the board, right? The fact that people have a watch list and then invest when the time is right. Peers have much higher. So what explains yours to be lower than the peers? That's what I just wanted to understand.
See, all of us have different strategies, and we provide different experiences on our platform. So it's not appropriate for me to kind of, comment on theirs. What I can tell you is that, we do not want to any which ways do anything artificial to increase our activation rate, but rather focus more on our platform, better experiences, and that's where our super app comes in. And the pillars of our super app is about simplicity, about transparency, about availability, reliability, and swiftness. With these kind of, amazing features and the pillars on which the product philosophy is, I'm sure people will activate whenever they want. Because we are a platform.
I'm sure that we do understand that Angel One has been front and forward as far as, the whole digitization is concerned, getting people on the app and growing your customer base. In fact, if you look at your client base as well, right, from June to September, your client base has gone up from 10.4 million all the way to about 11.6. Wanted to understand a little more about whether there is a further rise that you're expecting. And if yes, what could the growth be just in your client base?
See, I would say the trend will continue. We are focused that if market grows, we should grow in line or disproportionate to the market. And in case market remains stagnant or like there's a slow growth, we go for market share. If you look at last 3-4 months, that has been our strategy. And on a monthly incremental client acquisition, we have been gaining market share.
Okay, all right, Mr. Tiwari, we're going to leave it on that note and discuss the numbers once they come out for Q2 FY23. Thanks very much for joining in and speaking with us. So that's Angel One. It's not only the F&O space which has seen a stupendous amount of growth, even the commodity segment. Average daily turnover for the company is up 149% on a year-on-year basis, and it's up 42.5% on a sequential basis. So that's the other big segment which has seen a lot of traction. We'll take a break, but on the other side, trading strategies. Stay tuned.
Welcome back. You're watching us here on Halftime Report. We are still holding around the lows of today's trading session. As far as the markets are concerned, the Nifty is down almost 100 odd points. So a couple of interesting data points I was looking at from the F&O space. Two strikes, two options which are extremely active. We have the 17,300 call and the 17,200 put. Think of the call writers as bears and think of the put writers as bulls. 17,300 call writers believe that maybe, levels upwards of 17,400 is their territory because the premium on that 17,300 call is 115. So if the market goes above that 17,400 mark, the bears believe that there could be some resistance. And the bulls on the other side believe that levels below 17,200. So the 17,200 put writers are writing that option for about 130 rupees premium. So levels around that 17,050 to 17,100 is a zone where they believe there could be strong support. There are technical reasons for that as well, because levels upwards of 17,400, we have the 50-day moving average and the 20-day moving average, which may be the congestion zone for the Nifty. And the reason why bulls believe that 17,000 zone is there is because we have the 200-day moving average out there, which is just about 20 points away from the 17,000 mark. Apart from the index itself, I'm looking at three stocks and extremely interesting moves happening out there. Z, Indiabulls Housing Finance, as well as India Cements. So, Z as well as Indiabulls Housing Finance, not so much because the open interest jump has not been as much on that, Z and India Cements rather, but Indiabulls Housing Finance is extremely interesting primarily because there has been an open interest jump of almost 7 to 8% on that counter. Why is that important? Because open interest as a percentage of market-wide limits in all these stocks is upwards of 74%. So Z has 85% open interest as against the market-wide limits. India Cements has 80% and Indiabulls Housing has 74%. And these numbers are important because once this open interest crosses that 95% mark, the stock goes into F&O ban. So to that extent, it is important to keep these stocks on your radar. Indiabulls Housing in particular, because the open interest now has increased by about 9%. The minute it crosses that 95% mark, the stock may enter the F&O ban.
Okay, all right, Mangalam, thanks very much for that. So that's on the F&O space. But let's get talking about the technicals. Sachidanand Otirkar of Trade Bulls joins in on the show to discuss what he's strategizing at the end of this week. Hi, welcome to the show, Sachidanand. What is your call both on the Nifty as well as the mid-caps, considering that in the past couple of trading sessions, there was a lot of momentum, though there was intraday volatility, but today there's a bit of caution.
Good afternoon, Ekta. I think markets clearly, if you look at Nifty, it has been locked in well within a particular band. As Mangalam rightly said, the level about 17,300 would be critical, and I think that particular level is where its 20-day exponential moving average is also placed. And on the lower side, 17,188 is the 5-day exponential moving average support for the Nifty. So I think Nifty is oscillating well within this particular band. After a good strong run up throughout the week, we are seeing some bouts of consolidation. I think this consolidation is still healthy. If you look at the market participation, though the advanced decline ratio is almost 50-50 today, but if you look at the last few days performance, mid caps have been rising steady. So I think it's a very specific market when it comes when we look at today's trading session. But when it comes to Nifty, I think clear cut, once we have a sustained breakout above 17,330, we may see a momentum again getting back in the market, and probably we may see this particular level getting elevated towards 17,580 eventually in the coming weeks. So net, I think it's a good market wherein stocks should be accumulated. When it comes to Nifty, I think the stop loss is very clear. 17,160 is where you have to place your stop losses on a closing basis and look for buying opportunities.
Okay, look for buying opportunities, and this is a stock-specific market. So let's take our cue from there. Sachidanand, good afternoon. What are the individual stocks that you're looking at? We've had a fairly decent run in, names, say in the auto space. You've had a good pickup in names like Titan. What are you looking at?
Good afternoon, Sonia. Sonia, I think we are clearly focused on where the trend has been very strong. So one particular stock that has been on our radar is Blue Star from the mid-cap area. If you look at the last 8 weeks, it has maintained its tail above its 5-week exponential moving average. It is close to its lifetime high now. If you look at the weekly structure, we have a bullish rising 3 formation, which is a very rare candlestick pattern, and probably it is exhibiting that the stock could scale higher towards its life high levels, which is placed at around 1240, 1225. So a good trading opportunity is presented here. The stop loss should be placed at 1105. Still, trading longs should be initiated for a pattern target of around 1240. The other stock, the other pocket of strength today, surprisingly, is the chemical space, and within that particular space, Deepak Nitrate, the structure has been, improving very well. So if you look at the data from October 2021, there was a clear-cut downtrend, which was, which turned recently from a bearish trend to a bullish trend. Again, if you look at the weekly structure, there we have a bullish. A breakout from a falling wedge formation even on the daily scale. The price target of this particular pattern is placed somewhere close to 2230. So still fresh longs can be added in Deepak Nitrate. The stop loss should be placed at 2120.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and have a great weekend as well. We did speak about a couple of stocks, but just watch out for Coal India, because that stock, in fact, is the top gain on a week-to-date basis. It's seeing pressure today, but nonetheless, it's going home, at least at current reckoning, with gains of around 8%. So Coal India is one of the stocks in focus. Before we take a short break, here's some great news for investors. You can now track the US market action real time on Money Control. Log on to Money Control website or the app and stay informed about all that matters in the global markets. Take a break and be back. Welcome back. Well, it is weak for the asset classes and it is weak for the rupee. In fact, the rupee has opened at a record low today at 82.2. It's currently worsened. It's depreciated further at around 82.4. And to put it into perspective, it's depreciated 10% this year. Lata is here to tell us more about the factors impacting the depreciating that rupee at this point. Lata.
Well, no surprises that the rupee is under pressure. It's a double whammy. We have seen both crude prices and the dollar strength pressuring. It usually doesn't move together. When the dollar strengthens, commodities weaken a bit. But crude is rising for its own reasons because of output cuts announced by OPEC+. And that's, a good 9%. If you looked at the October 2nd, last week levels, it was ruling at about 86 and change, and now at 94.20 thereabouts per dollars per barrel. The rise is substantial. The other set of people who are buying are those who probably went short dollar, anticipating that India will get included in the bond index and there will be dollar inflows. So those short dollar positions are also getting covered now that that inclusion is not coming. The big buyers, dealers tell us over the past 2 days have been oil companies. The Reserve Bank is supplying dollars, but it is not trying to move the exchange rate. It's apparently looking like supplying only where the demand is, or at the level the demand is. Actually, the Reserve Bank would be happy with a gentle depreciation of the currency because the trade deficit, especially with China, is pretty wide. And the Indian rupee has appreciated versus the yuan. So a depreciation would be welcome. What the Reserve Bank fears more is depreciation anticipation, not depreciation itself. Dealers are talking about 82.50 as possibly the next level where a defense may come, and 83. But these are just wild guesses, There is always that expectation in round numbers like 82.5 or 83, where they expect the Reserve Bank will come and support. Just a word on the bonds. The yields have gone up. They've been going up continuously for the past 2 or 3 days. Again, for the same reasons, anticipation of bond index inclusion not coming through. I mean, now it is confirmed. The dollar index, crude prices moving up. And finally, US yields also moving up. So everything is pointing to higher yields. 7.5 is higher than the highest point in September. The chances are that it can even go to 7.62, the 10-year yield, which was the highest we saw in June.
Okay, thanks a lot, Lata, for that. Let's slip into a quick break. But when we come back, we will focus on Varoni Engineering. There was a conference call that took place. The stock is still down about 9%. More on that in a bit.
Welcome back. Well, it's weak for the markets, but a couple of stocks which stand out within the pharmaceutical space are Torrent Pharma as well as Biocon. So for Torrent, it has been in focus on account of multiple pieces of news, such as the Curatio Pharma deal as well as the Indrad plant getting inspected. So the latest news is that we have accessed the 3 observations which were issued to the Indrad facility, which was inspected just a couple of weeks ago, just a couple of days ago, in fact, September 19 to the 28th. It was issued 3 observations, and it seems as though the observations which have been issued will probably take a longer time for Torrent to resolve when it comes to US FTA issues. Why is this negative news? Because this particular plant already has a warning letter which has been issued to them. But why is the stock recovered from the day's low? Is because the street seems to be more bullish on the domestic pharma growth for Torrent Pharma as compared to the US markets. Torrent, remember, gets 60% of their sales from the Indian market. Biocon, the European drug regulator, has inspected their API facility. They have issued critical deficiencies, or they have said that there are no critical deficiencies, but there is one deficiency which is under the major category. So that stock is weighed down because just in the month of August, the US FDA had inspected 2 of their facilities, the Bangalore facility, Malaysia, and they had issued observations to that. So this basically just adds on a layer of negativity when it comes to the regulatory angle. But Sonia, you're watching Varoni Engineering on our special segment Value Add. Tell us more.
So we just heard, right, from the management about the deal and why the deal size was brought down. Just to quickly put it into perspective, the sale price for the 4-wheeler lighting business, the deal was brought down to 520 million euros versus 600 million earlier. And they'll also be paying a 51 million euro compensation for the infringement litigation case. And that's why the stock is under pressure. The management at the analyst meet said that the deal was brought down because of the current economic scenario. Across the globe, mergers and acquisition activity has come down significantly. M&A activity has gone down by 50 to 60%. So the management's only goal was to conclude and save this deal, even if it's at a lower price. Now, the focus for the company is now on prudent capital allocation and free cash flow generation. They still have a debt of approximately 400 million, the debt of 400 million euros was settled, and the net cash now is estimated to be 5 to 9 million euros. But the big question now is, what next for Varoni Engineering? Now that it's sold its global lighting business, what stays back with the company? The leftover business includes the 2-wheeler and the 3-wheeler domestic lighting business, and that has been doing well. The domestic lighting business saw its highest ever revenues at 480 crores in August and 520 crores in September. The EBITDA has also been improving for them. It improved sequentially by 200 basis points in the quarter gone by. They've added 3 new customers in the last 6 months in the electric vehicle space particularly. And the order book value is also quite strong at about 1,500 crores, out of which about 500 crores of orders are coming in only from EVs. So the remaining, the domestic business is looking very strong, but just the fact that they couldn't sell the global business at the price that they were looking at has caused a big dip.
It has caused a big dip, but like you said, so long as they sell it even at a discount or at an amended valuation. But the EV part struck with me, Sonia, because the popularity of electric vehicles is gaining momentum both in passenger vehicles and 2-wheeler segment as well. What are you gathering here?
So it's the future, right? EVs are the future. I mean, in a matter of time, all 3 of us will be perhaps driving an EV as well. So the numbers are showcasing that. The Federation of Automobile Dealers put out some very interesting data where they said that the total passenger vehicle EV industry saw a 172% year-on-year rise in the month of September at about 3,419 units, and 2-wheeler sales went up 211% year-on-year. Now, if you look at the breakup in passenger vehicles, right, Tata Motors is, of course, front and forward over there. Passenger EV sales went up 217%. MG Motors has actually fallen. So it's very interesting. Tata Motors, M&M, Hyundai have actually been gaining ground, while MG Motors, the EV sales are down 14%. M&M looked very good. EV sales went up 489% on a year-on-year basis. And even Hyundai Motors sold about 74 units versus just 7 units same time last year. In the 2-wheeler space, the best of the lot is TVS Motor. It's up 473% year-on-year. They sold 3,940 EVs, while Bajaj Auto went up 581% year-on-year. And Hero Electric Vehicles, the EV sales went up 27% year-on-year. So a sharp pickup is what we've seen in EV sales, both on year-on-year basis as well as a month-on-month basis. That's the big trend over there.
It is indeed. When are you buying your EV, Ekta?
I have no idea. I like to run my car to the ground and then probably appreciate, get a car, but I have some time to go.
But there are so many new EVs coming up that you'll have a problem of plenty perhaps to choose from. Let's slip into a quick break. On the other side of the break, Manisha Gupta will join in. She has with her Jonathan Barrett of Probus Securities. Stay tuned.
Welcome back, and Jonathan Barrett of Probus Securities now joins us for his take on commodities. Jonathan, good to have you. I'll start with the crude oil prices first, and after 4 months of decline, we've started this week on a positive note, 11% on the higher side. OPEC meeting is done with, and $94 per barrel is still holding. What's your sense on the prices and demand going forward?
Manisha, good morning. Good afternoon, sorry. Look, I think we've actually got a bit of a range there for when you look at Brent crude. Obviously, the supply cuts were quite extensive, about 2 million barrels. I think the effective is really about a reduction of about 1 million barrels. But the market seems to have taken it quite supportive. And as a result of that, I think we've found an intermediate low. I do think that as oil, if it does continue to move up, then we do have those inflationary fears and interest rate movements, and then that'll squash demand. But at the moment, I think she has found a bit of a base and wouldn't be surprised to see it sort of head to the top side, maybe looking at that US $100 a barrel basis, the Brent contract.
All right, so we are heading higher, yet higher. $100 a barrel is a possibility right now. How would you look at the winter demand? Because the focus clearly has shifted to that one. While Europe has enough gas to last them the winters, but what happens after the winters? And is it only going to be used for heating purposes? What happens to the industry, with the dearth of that? How are you looking at the next 3 or 4 months now?
Look, I think that's going to be obviously winter demand. We're still coming to the end of the hurricane season. Although the hurricane season didn't, with Ian, we did see a spike, but wasn't as much as we thought. But I think as we do get into the winter months, you are 100% correct with the gas. EIA just reported that they got ample supply. In fact, builds were getting close to domestic levels or record levels, which was good. But I do think, and I always think that when we do come into winter, we do get those extremes. That is always a worry for me. But I think we've got enough energy on hand in terms of oil. Gas, I think we're sort of being prepared. We could be prepared a little bit better, but at the moment, I think we'll limp through winter, with the gas that we have, particularly in Europe.
And with the kind of gas that we have and the prices that they're trading at, with nearly 50% of capacity for many of those smelters shut in case of many of those zinc and aluminum mining there, what's your sense? Do you see more shutdowns, more capacity closures coming in?
Well, I think that's what I would have thought. And when I look at the prices of, say, aluminium and that, I would have thought that we would have seen more, but it seemed to be quite well contained. When you look at the actual price, yes, we have seen a little bit of a spike off the lows, but over the last 2 months, you've seen aluminium prices, copper prices and all that under pressure. Now, to me, that is a bit of a concern. Obviously, it is the economic side of it, which is causing prices lower. I do have a concern always that we don't have the supply of the metal once we get a bit of a turnaround. But I think whilst the market is quite happy to say that we have that recessionary fears, inflation's there, if the market quietens down, well, then we're going to not have an issue at the moment in terms of the supply of the market, supply of, say, aluminium, caused by smelters closing. But I think that turnaround picture will be quite aggressive when it does happen. But at the moment, I haven't seen it yet.
Jonathan, I was reading a report which was commissioned by International Silver Institute, which also says that silver is yet another metal that you should perhaps have in your portfolio, even by 4 to 6%. I mean, I saw this the first time, a conversation beginning on silver as a part of portfolio too. But if you were to make a commodity portfolio for the rest of this quarter now, till the end of this year now, how would you buy and sell commodities? I mean, you said you're buying crude for one. How would you stack in metals and precious metals within this?
Well, that's quite interesting. I also go back onto your comment on silver. Silver, the current stocks in silver are getting very close to record lows as well. So if there is a bit of a squeeze there and there is more demand, then silver will have a little bit of a pop to the top side. Yes, it's sort of trading that area where it sort of has found a little bit of base, just with gold as well. So I think we might see a little bit of a movement. As we move into the next quarter, next couple of quarters, if I were to build a book, I think I would remain to have silver. Obviously, I've got some gold in the portfolio at wrong levels, so I think I might add to that. And of course, obviously, crude. I do like the look of aluminium, but not yet have I gone into the market. But I think that should be part of the commodity portfolio.
All right, so that is what your commodity portfolio should look like. Crude, aluminum, gold and silver. Silver definitely is an addition there. Jonathan, as always, thank you so much for joining us today and making sense of all of that's happening in case of commodities. And that's all the time that we have on the show. Stay tuned. Business Lunch will take all the action forward.
Thanks, Manisha.